right as I'm recording this. 134 countries representing 98% of global GDP are building some form of central bank digital currency. China's digital yuan has already crossed $986 billion in transactions. India's digital rupee usage is up 334% in a single year. And in November 2025, the IMF released a policy paper laying out exactly how central banks plan to implement what they themselves call the financial reset. This is not theory. This is not conspiracy. This is infrastructure being built while most people scroll TikTok and assume nothing has changed. If you don't understand what's happening over the next 18 months, there's a good chance you end up on the wrong side of the largest wealth transfer in human history, because your government is already running a playbook called financial repression. Financial repression, the silent policy. Here's how it looks in numbers. Interest rates sit around 4%. Inflation runs closer to 6%. That gap means every year, about 2% of your purchasing power simply disappears. You think that's an accident? After World War II, U.S. national debt was about 106% of GDP. 28 years later, it was down to 23% of GDP. Did the government heroically pay it back? No. They inflated it away, transferring wealth from savers to borrowers, from citizens to the state. The UK did the same thing. Debt fell from 216% to 138% of GDP in a decade, using the exact same playbook. Now global debt sits around 93% of GDP, over $100 trillion. They've done this before with smaller numbers. Why wouldn't they do it again now that the scale is 10 times bigger? The one flaw in old-school financial repression is simple. People can still escape. You can move money offshore, buy Bitcoin, hold physical gold, invest in foreign assets. As long as cash and current rails exist, you have an exit. So why build CBDCs? CBDCs, from money to control layer central banks' digital currencies, are not just digital dollars. They reprogrammable money. Money that can expire if you don't spend it. Money that tracks every transaction. Money that can be restricted or shut off for specific people, places, or behaviors. The European Central Bank openly talks about a global euro moment to strengthen currency controls. China is already running cross-border CBDC payments between Hong Kong and the mainland. That's not a toy pilot. That's deployment. And if you're thinking, this doesn't really affect me, let me be direct. If you're holding cash, CDs, bonds, or fixed income, you are the extraction target. The system is designed to pull values from exactly those positions. Your retirement account might be earning 5%, but if real inflation is closer to 7%, you're losing purchasing power every year. That's not bad luck. That's policy. When politicians talk about unrealized gains taxes, wealth taxes, property taxes, they're not brainstorming. They're remapping every asset they can identify and eventually tax. The only reason they haven't gone full extraction mode yet is that they don't have full visibility into your financial life. CBDCs change that equation overnight. If this is the first time you've heard this angle, hit subscribe, because every week breaks down what they never teach you about money, freedom, and how the system really works. Why the wealthy don't lose sleep over this. The wealthy aren't panicking about CBDCs and inflation. You know why. They're not holding cash. Ultra-high net worth individuals keep maybe 6 months of expenses in cash. Everything else is in assets that can't be easily debased. When governments inflate the currency, those assets rise in nominal value. A $500,000 property becomes $700,000, not because the house is better, but because the dollar is worse. The wealthy are holding the ruler. You're holding the thing being measured. Look at what sovereign wealth funds are doing. The Abu Dhabi Investment Council tripled its Bitcoin position in Q3, not reduced, tripled to about $520 million. MicroStrategy keeps buying every dip. Morgan is accumulating. These aren't retail traders panic selling. These are the people who move markets, and they're loading up while everyone else runs. When the system breaks, what history shows to understand what happens when the system really breaks? You look at the Great Depression. People in cities who depended entirely on paychecks got destroyed. But rural familia could hunt, garden, and raise chickens did far better. On a farm in Nebraska, Helen Bolton said her daughter never went hungry because they had canned meat, chickens, milk, and homemade bread. In cities, families were eating macaroni and splitting one meatball between 8 people, getting headaches from not eating enough. The difference wasn't geography. It was self-reliance versus system dependence. The Depression-era motto was, use it up, wear it out, make do, or do without. They resold shoes with old rubber tires and cardboard. They canned tumbleweed. They used rags instead of toilet paper. That's what it looks like when currencies collapse and supply chains fail. Fast forward to 2008. The popular survival strategy was to avoid the job market entirely. Millennials flooded into grad schools and community colleges, waiting out the storm while racking up debt they're still paying. That only worked because its system itself still functioned. Schools were open. Loans were available. Infrastructure held. What happens if the next reset hits and those safety valves don't exist? The Fed is cornered, and you're the cushion. Right now, the Federal Reserve is trapped. Inflation is elevated. The economy is weakening. They need to cut rates to support growth, but they race scared of reigniting inflation. The government shutdown created a huge data blackout. They're making interest rate decisions, essentially half blind. FedWatch now shows only about a 48.9% chance of a December rate cut, down from around 90% just weeks ago. When traditional markets are uncertain, risk assets get crushed first. This is the squeeze play. Retail investors get flushed out. Liquidity dries up, and institutional players accumulate at lower prices. If the Fed doesn't cut in December, and economic data keeps disappointing, Bitcoin could easily test $76,000 or lower before this is over. Depression survival, updated for 2025. So what does depression survival look like translated into today? Back then, people who did well had skills like plumbing, carpentry, paintings, repairs. A jack of all trades could still find work. Today, that means digital skills, remote work, multiple income streams. You can't rely on one employer, one paycheck. Back then, extended families lived together, grandparents, aunts, uncles, cousins, and relied on community. Neighbors threw surprise parties to collect food and money for struggling families. Today, that means building your network now. Joining communities that track economic risks, sharing information, turning that network into your early warning system. Depression-era families were considered rich if they had a cow and a garden. Today, you're rich in real terms if you have marketable skills, hard assets, and zero personal debt. And the asset rules haven't changed much. Assets with intrinsic value, limited supply, hard to confiscate or debase directly. Bitcoin supply is capped at 21 million. Gold supply grows about 1–2% per year. Productive real estate and profitable businesses that control real assets benefit as money is debased. Your emergency fund belongs in high-yield savings. Beyond that, cash is a wasting asset. Bonds, you're lending money to be repaid in devalued currency. If inflation exceeds your yield, that's a guaranteed loss. Tax-disadvantaged accounts can still hold tools like TIPS, which adjusts principal for inflation, though they track CPI, which understates real inflation, rates for property exposure, commodity funds tied to physical goods. For higher risk tolerance, Bitcoin offers volatility, but also immunity to money printing. Volatility means prices swing. Debasement means your savings only go one way in real terms, down. The window is open, for now. Here's the bottom line. The financial reset is not a rumor. It's documented policy being implemented by central banks right now. Your government won't say, we're going to inflate your savings away. They'll call it modernization, efficiency, inclusion. Millions will be caught folding cash and bonds as the reset accelerates, watching their purchasing power vanish and wondering how it happened. Don't be one of them. Position yourself on the side of assets that rise as currency is debased. Build multiple income streams. Create geographic diversification, learning skills that mattered in the Depression, growing food, fixing things, creating value with your hands, and combining them with modern tools, remote work, digital products, global markets. The reset will crush millions. But those who understand what's happening and act accordingly won't just survive, they'll thrive. The wealthy prepared years ago. You're seeing it now. That's your advantage. You still have time. Just remember, that window is measured in months, not years. Now, while the transition is underway but not complete, that's when you move. Which side you're on when the reset isn't decided by luck. It's decided by what you do right now. See you in the next video.